Good evening, everyone. It's Chris from Soul Society R as well as Excel. You can find us on the websites, Twitter, Instagram, as well as Discord. You can DM me on either Twitter or Instagram to get a hold of me. We use this adaptive algorithm that's built by traders for side market, up market, as well as down market. Remember, we're not a broker dealer. Past performance doesn't indication of future results. The first thing I want to talk about is the good, the bad, the ugly, as well as being neutral with no bias. I took some of the sectors in the overall market and I wanted to talk about one or two stocks as well as Bitcoin. The most important thing, do take a snapshot of the semiconductor. We're paying attention to gold in relationship to SPY in the tech sector, interest rates, value play, ARC management, large cap growth, AGG, Dow Jones Industrial Average, transportation, Charles Schwab, large cap growth, VU is the S&P through iShares, IWF is an IWD, the 1000, the dividend, and 1000 small cap. The IWM is the Russell 2000. You can look at the IWN. Mid is the mid cap. XLU, utilities, healthcare, XLV, XLE is the consumer products and staples. Not all the S&P sector, I only took three of them. I took a look at the NVDA because it's been getting beat up a little bit, and I told everybody about a month ago, pay attention to this one. This will be, the start of a major move back down in the tech sector, which is especially to XLK and SMH in the semiconductor. You got Google and Amazon. I put here the S&P E-mini, the NASDAQ, the Russell, and the Dow Jones Industrial. Last but not least, it's Bitcoin. In this area, I had mentioned the SPY, the electronically traded fund. I want to show you in case of a drawdown. Let's take a look at the second slide. What I did, I put the tick chart up here. The tick is the New York Stock Exchange part of the S&P 500, the distribution in relationship between being positive or negative on the exchanges. The New York Stock Exchange was down about 6%. The NASDAQ was down about 5.4, let's call it 5.5% in relationship, and the breadth of the market was negative all day. If we look from 0 to a plus 1,000 or 0 to a minus 1,000, most of the distribution happened below the 0 and below the 400. Sometimes we tapped into the 800. We had the lowest tick for the day was minus 1,047, and the high was 893 in relationship to the S&P 500, but you can see that the distribution, whenever we went up, we sold off, and you can see that the breadth advanced decline line in the stock market is to the downside. I used the same setup as the top one to simplify it, just to show you the overall 0 to plus 1,000, that the distribution on the top side, I marked it with a yellow, that it wasn't as much as the from 0 to the bottom minus 1,000, and I marked this one in white. It's the same thing, but it's just a different format, showing that the advanced decline line in the breadth of the market was negative all day. So let's go to the next slide. And what I did, I have some people in my room, they keep asking me why you only talk about the S&P Fortune E-mini contract instead of the electronically traded fund. Year to date, the drawdown from the highs of January, we have a minus 9.48%. I took the prices of the S&P 500 in case of a drawdown, total drawdown of 11%, 12%, or 13%. These are example for illustration use only. Don't be biased. And remember, even if we get down to minus the 15%, then we have entered a bearish market. When we are above the 15, it's just a minor correction. So far, we are trending down. But if we end up losing the 15%, we end up in the bearish sector. If we are above 15, this is a small minor correction due to the global market economy, war in Ukraine and Russia. If they're going to talk about peace, as well as the tariff between US, Europe, Asia, as well as United States and Canada, as well as South America. Let's go. Last but not least, you can find me on the website. Get in contact with us, give us your commentary, and share with your friends. Remember this slide. Remember the sectors. Let's go first. Taking a look at the S&P 500. I have 9 month here in the S&P 500. If I take the high to the low here, and I just use a drawing tool, which is a line here on TD Ameritrade, or they call it TD Nest Thinkorswim, which is now Schwab. Sometimes we use TD by accident, so this is a Schwab platform under Thinkorswim. You can see that the drawdown to the bottom was 10.36, and if I take it down to here, you can see it's 9.48% down in the S&P 500. This is very simple to draw. And if you take the nearest high and low from here to here, we have basically the 38, the 50, the 61, the 78. Here we have the 23 we have lost. In case we come into this area and we get a bounce, so that we continue further to the backside of this, because this is the consolidation that we had. If I get a marker or an oval, I just want to show you this. This is the area that we were consolidating last time. We got the rebound in it. You can see it here. It bounced back up, but unfortunately we sold off. I'm going to remove it. The reason why I wanted to make sure that you are paying attention to these levels, because this was the breakout retest of the highs of this area, bounce off, retest it one more time a little higher and continue higher. We tried to come back down, but this was the consolidation and the gap. We filled it. We rallied up. We created like a triple top up here, and then we eventually sold off. We tried to rally. We didn't make it to the 50. We lost the 18 simple moving average, the 200 SMA, as well as the 250. And we're falling down. I am paying attention to that double bottom and this consolidation in this area. If we don't, and we end up gapping on Monday to the downside, be careful on the first 5 to 15 minutes in case there is snap back up in the S&P 500. Let's go take a look at XLK, which is the tech sector. And I wanted to show that the tech sector from this high down to this area here, oops, I didn't use the line. I want to use the same situation that we did earlier to show you that the drawdown has been more than 15%. Is 15.45. This is a double bottom in case we do gap down and come back to this area, which is this candle here and this one here, in case we get support or we get to the backside of this channel before continuing higher. Let's take a look at the SMH, the semiconductor sector. We can see that the semiconductor sector, if I take this high from here to this here, we are in a downtrend. And even if I take this area here to this control point, we are in a wedge continuing lower. We fell down 3 days in a row. If there is a gap down in the morning on Monday through Tuesday, pay attention to that backside of this channel in case we fall down and reverse back up to the backside of this channel. This is very important. What I want to do, I usually do the commodities first. Today I did them the other way. I want to show you the yield in the interest rate bearing account. You can see that in the Spiders Bloomberg high yield, we can see that the rates have dropped down and the par value, rates are going up and the par value of that bond is coming back down. I am paying attention to this area from here to here and here. In case we do fall down, you can see that we are still in a downtrend linear regression channel. If I duplicate this channel and I put one in the middle, we are right in the center of that gravity. What I want to do is basically duplicate this and move it. Duplicate. And that way I'll show you how to do this, and we can duplicate it, put it right here. We're right on the center of that area, that 50%. Do we open up and fall further down to this backside here, or do we reverse back up? Pay attention to the yield in that area. W. I'm going to do the F, which is the Russell 1000 gross. I wanted to show that to everyone in here. And you can see that the Russell has double bottomed here. We are in a similar situation. This was the consolidation before the rally retested and continue high. Then we consolidated for a while, for a couple of months. Then we fell sharp. I am paying attention to this backside of this consolidation here in the small cap IWF. Look at the, for example, Charles Schwab Large Cap Growth, SCHG. I'm not going to use the dividend yielding account. You can see that it's in the same situation on the gross as the S&P, and you can take a look at the VOO. This is the one. Vanguard, S&P 500. It's all in the same thing. It depends which one you want to trade, SPY or VOO, or the iShare ones. So this is part of that. Let's take a look now, break down the SPX. And before I do that, let me just go to Excel energy sector. You can see that the energy sector has 3 times tested this area and we fell back in. I'm paying attention to this backside of this channel because it will meet the backside of this downtrend in case we get support and reverse back up and clear this top, clear this consolidation that we looked above and failed. If we can clear this area back up, I think it's to the upside in the energy sector. Let's take a look at the XLV, which is the healthcare sector. I think there may be opportunity in the healthcare sector. I can see that we are creating a wedge. You can see that old channel that I had up here that's no longer valid. Even if I remove this one, we'll just keep that one there for the time being. You can see that there's one top, this area gap, came back, retest, rallied, came back, retest. This is a shoulder, head, shoulder. In case we do find support in this area, look for a reversal back up in the XLV in the healthcare sector. Let's take a look at one more in the XLU. In the I want to use the XLU, and you can see in the selected utility area, you can see that there is a lot of consult. We had looked above, then we fell back in this range, and now we have this top, and this top. While we have these two tops in this consolidation, even if I fall back to this area, the 200, and find support here, I'm looking for a reversal in XLU. Take a look at the FTX. And what I want to do is show you how to do the measured move in the overall market. Usually I show the drawdowns. You can see here from this high, I showed the drawdown down to here. It was basically a 5.3% from here all the way down here. We showed that there was a 10.56. And if I do it again from here to this area here, you can see that the drawdown is about 5%, 9.48. It depends how you look at it in each. Remember, the SPX is the big contract in the S&P 500, which represent the 500 companies. The SPY is the electronically traded fund, and the E-mini is the same way. So I want you to pay attention to that double bottom down here, and we are wedging in a downtrend channel. Even if I take this area and I connect it to up here, you can see we are in a wedge down on the S&P 500. Let's take a look at the NASDAQ NDX, and we can see that the NDX, after that consolidation up here, we had this area. I drew this down move earlier before in the prior year. We tested this area, bounced off, we rallied up, came back, rallied higher, but we never had that reset. And I left it as historical data. Usually I do that on most of my charts. I keep them there for history, and it tells us a little bit about the story. So basically we can see that there's a gap here. This was Monday, Tuesday, Wednesday. This was Friday, Thursday, Wednesday, Tuesday, and Monday. Monday, we rallied on a gap up, and Tuesday was an inside day, look above and fall back in. But we couldn't clear the 200 SMA or the 38.2. We fell 100% back down under the 23%. I'm paying attention to this gap down here. If there's going to be continuation, I will pay attention to this area down here at the 18,425 in the NASDAQ 100. Take a look at BTC, Bitcoin. I'm going to use the micro BT or the GTC, micro BT. And in the micro BTC, you can see that I had this gap up here marked. It was larger. We filled a portion of it. Then we fell down, filled 100% of this move, rallied back up. But since we rallied back up, I had this consolidation in Bitcoin. We were downtrending. You can take this, connect this line, this dot, or this one here. Even with the top one, we are still in a downtrend because we tried to look up. We couldn't go up. And then we had a channel up here going up this way. If you look at it, we eventually lost it. We looked above and failed. Right now we have a sharper downtrend channel in here connected. If I connect these dots, if it comes and goes through it and touches the 200 SMA and tests that gap and reverses, that's great. If not, I'm looking for the backside of that 74,075 because it will somehow find support in this area before the reverse, because this was the pull shot, consolidate, gap up, and continue. That was a professional, and that double top at the 106,000, 104,000. I had told everybody get out of the way. There may be a retest coming back down in Bitcoin. And what I can do is basically connect this area here with this one. We can see that there is a sharper decline even coming back down in here. This is in a wedge coming halfway and bouncing back up would be great, because if I duplicate this, if I go duplicate the drawing and I just grab it and I push it to the upside, even down here, you can see that this wedge is not clean. So I would not do that. What I would do is just draw my own line like a fan, and I'll connect it to the midpoint of those two ranges. So you can see where it is in relationship to that move. It eventually will meet in this area. I'm going to activate it and just move it slightly a little bit down so it's in the more centered than anything else. That would be much better, coming back to this area and getting a bounce in Bitcoin. Or you can use gbtc or ibit. It doesn't matter which one you use. Make sure you're paying attention to this full gap and the one down here for this consolidation before the rally, in case we end up in this area. That's gbtc. This is in the ETF iShare Bitcoin. Looking in the same situation, you had this gap you filled, you had this island here, you have this island here, in this small gap in case we end up in this area. And you can see I marked it with a purple line around the 45. Let's go take a look at now the micro ES, and I will do the measured move, how to calculate the distance, how to look on reversals. Anytime you want to understand a sector or understand a reversal from point A to point B, if I take this high from here to this low that we had a 3.94% decline in the market from the prior week was an inside week. You can see it here, but we fell further down to 3.94. But if I want to take the total from high to low, where we were at the high, to come down to here, we are at 9.14% on the new contract, which is the S&P E-mini M contract for June. So if I want to do the measured move, what I would do, take the daily. From the daily, I shift it to an intraday. Intraday, I will put it in 20-day or 30-day range. Let's say we're going to do 15-day range. Instead of a 1 hour or 2 hour, I usually like to use the 4 or 6 hour on my charts. The reason why, I want to see enough data on there. And what I would do, usually most people will draw a fib from here all the way up to here and show the levels on the S&P 500. I don't want to do it this way. I want to show you on the weekly where the range was for the week. This was last week's Friday, which I would not consider. I will look at the high for the week, which is up here, all the way down to here, that we had the sell-off in the after hours. I would use the measuring tool. I will duplicate the highs and lows, the highs and the lows. If I edit the property, I will show you how to do this. This is a freebie for everyone. You duplicate to the top minus 0.25, minus 5, minus 8, 0.8, minus 1, and vice versa, 1.25, 1.5, 1.8, and 2, and I would color them in this level, so that way you have the extensions to the upside and downside in case there is a reversal, usually in the 20% range, 180 to the bottom, 180 to the top. We usually get a reversal in the S&P 500. I hope this video was very helpful. If you have any question, once again, get in contact with us. We're here to help. And here are the sectors one more time for you to take a snapshot. Take care. Over and out.